Hey, it's Sasha Evdokov. Welcome to the Stock Market Rapid Recap. It is November 12th, 2015, and this week's lesson is about getting to fast gains in the stock market. And really the core of the lesson will be about speed of implementation. Now, if you don't know yet already, there's two primary things in the market or in anything that you do that you need in order to be successful, profitable, whether that's playing a sport. You need the physical aspects or the outer game, and you need the inner game as well. So you need both parts to work together in order to be successful. So for example, if you're playing a sport and you're a hockey player, you need to be able to have the physical aspect, the slap shot, the skating. You need to be able to do the physical parts, which is the outer game, but you also need to have the mentality. You need to be patient with the puck. You need to be patient to find openings and take the appropriate shots when necessary. And if you miss, you can't get too upset, because if you get too upset, your mental game or the inner game is lost. And then you won't be able to recover, continue moving forward, and just be struggles. So you need to have both concepts for having success. So in this week's lesson, we'll focus a lot on how to get to those gains, and they're not really fast gains. The title is a little bit misleading. It's really about getting to the gains, but the quick way of doing it is all about speed of implementation. So this week's lesson is about the inner game, and I'll share with you my story of how I've kind of learned concepts in the stock market and how things evolved for me over the years. So we'll get to that. Last week, we covered all about risk management and how to really take shares off into strength. This was all basically the outer game concepts. It's all about the technique, the physical things you need to do. In this week's lesson, it's really about the inner game, what you need to do for yourself to get better. So it's not about learning about the market. It's actually more about yourself. So before we get into this lesson, I do want to share with you, as always, a couple of quick announcements. So here on this screen, what I wanted to do was just share with you some things that I've been working on for the option trading course. And this is actually what I wanted to do, was to share with you all the different modules, sections, components that we have in this course. It'll probably be broken down into multiple courses. Just that way, it's easier to digest, but we'll have things put together, and you can see all of these are just modules upon modules that we'll be putting things together. So you can see it's quite large. So when it is ready to release early next year, I do apologize if it takes a little longer, but you can see that this is a lot of filming and a lot of work. And just breaking this apart, so taking, for example, just one of these things. So if we get into setting up a basic calendar, there's subsets in there. If we get into entering an iron condor, there's things about buying versus selling, time, how far. So all these are modules as well. Executing the order. There's things about winning and taking profits from iron condors. So there's a lot of different notes and things that I've been putting together. So all of these have subsections within them. So you can see this is a pretty big course. So just want to let you know how that was progressing. We do have to work a little bit more on the weeklies here. But other than that, we're filming, we're getting things going, we're getting ready to film some things. So all these things are moving. It's a massive course, and with the holidays around the corner, that's kind of what my primary project here is going to be as we wrap up some final business things. Now, one thing that I would love if you could do for me, if you're interested in the option course, then by all means, go ahead, go to the website and send me an email of something that you may want to cover or some struggles that you're having within trading options. Now, I understand that sometimes you may not even know what you don't know. But if you have something that maybe you're struggling with, something that you would love to learn, maybe a goal of yours with options, if you could just take a moment to go ahead and, fill out a quote form, then go ahead and do that, because it'll be really helpful for me. And not to mention, then it'll be really helpful for you in the future when you're taking the course. So that way I can make sure to cover as much information as possible within this mastery course. Before we get into the lesson of this week's rapid recap, what I want to do is just share with you the market, how things are going, how things are progressing. Right now it's nearly, or by the time we finish this recap, it'll be about 3:30. It's 2:40 right now, Eastern time. But by the time we finish, it'll probably be about 3:30. And you can see that the market is rolling over a little bit over the last few days. So this is the S&P, the Spiders 500. If you go to the Dow Jones, DGIA, you can see also 192-point sell-off. Now, looking at individual specific stocks, they're not doing as bad. But you can see that when we look at the SPY here, we're nearly reaching this top level. And we're nearly hitting those top levels where the stock market, it could be selling off at. So when we start reaching these highs, you want to be mindful that there's not a lot of room left for the stock market to go higher because it's rejected at those higher prices. If you go to the S&P, the same thing right here. You can see we've hit, these were the levels. We tried to get there, but we didn't even have enough room to get there. And that is partly because this move that we had right here is just quite extended. So when you look at this move is just very quick, very fast. And I talked about this a couple of weeks ago or about a month ago where I said if we go too fast, too quick, then what'll happen is that, we could probably roll over or we'll isolate here for a little bit and then could power higher. So it's important to always know and understand how fast a move is when the move is going. So as we look at the Dow Jones, the same thing basically is happening with the Dow Jones. You can see that the highs are over here and, we didn't even get that far, but we moved up too fast, too quick, and now we're rolling over and pulling back. And there's nothing wrong with that specifically. It's just part of the movement in the market. Markets don't go straight up. Markets don't go straight down. They move in a wave-like pattern. And, if we get too far, too quick, overextended, then we will have a slight pullback. And that's just healthy. That's normal for the market. Looking at the positions that we're in, we've been in heavy on Google, actually. That was one of the positions that I've been trading quite large on. And this has been a solid winner for me. And stocks nearly continues to climb higher and higher with light pullbacks from time to time. So nothing wrong with that. Little pullbacks here and there. You can see on the weekly here, we have a few nice opportunities that you had on the break here. And then you also had it on the break here. So multiple breaks. As you look here as well, there's a lot of breaks that happened, and those were really your entry points. Amazon was another one that we've been large in. And for me right here as well, the same concept, same stair-step pattern. All these were opportunities. And I know that we had earnings right here. So you might be wondering, so how did I trade earnings? How did I do the trade? Or what do I do when I trade earnings? Because I don't trade earnings. Those of you that know me, I don't trade earnings. I don't keep my stocks during earnings. I get rid of 80, 90, 95% of my shares, or most of the time 100%. Normally, I don't even hold it during earnings. And what happens here is when looking at this, really, I waited. I thought and I believed that the gap would fill. This is typically what I believe is when a stock pops this high, I don't chase it. That's one of my rules. I don't chase it. I used to chase it. Now I don't chase it. So here, the stock popped, opened right here, sold back off down here, and that spread was $18 sell-off. Even though it popped high, that sell-off was $18. And I didn't want to give it an $18 stop right there because I didn't know if it could fill this gap right here or get back in here. And if it got back down here, that would be 564 from 616. And you say, well, it had good earnings and this and that. But I could tell you stocks like Netflix and so forth that had these kinds of pops and then continue to sell off further. The market didn't like it and it got down over here, 528. So I'm always mindful. I'm always patient, disciplined. And that took time. That took time to get there. So here, I was waiting. Here was the sell-off. So it took a few days for the stock to break. And this was the breaking point right here. I waited for this breakout. And you can see that this breakout, it's minimal. It's subtle little signs, little clues right here. You can see these two bars were heavier than when you start looking at, let's zoom in right here. when you start looking right here, look at this light little bars, and now look at these bars right here. Look how much higher they are. This is normal activity here. Okay, and this is now the breakout activity. You can see the difference right there in how that moves. So my entry point actually was right here. This was my entry point. When it comes back here and it bounces, that's the adding point. Okay, then here's another opportunity. If you didn't add there, you could have added right here. Okay, so this stock continues to make higher highs. And from here, we basically had a good 49 point pop. And I've been taking shares off into strength, of course. Those of you that watched the previous video, of course, I only have about a third of my position remaining here. And we'll let the rest ride. But a lot of that position is just, on a 47 point gain. I mean, how much more are we looking for, right? So you take a lot of it off, you let the rest ride, and just see what happens. So as it pulls back on lighter volume, if it pulls back, let's just say it starts pulling back right here, then I may add to that position and it bounces. I may add there. So that's kind of where we're at. IBM also a good short that we've had. So here we talked about it for quite a while. There was the support point right here. The breaking point came back up, rejected it. There was some resistance up here. You could have shorted it there as well. The stock just continues. And I talked about this one before, that 120 area would be a good level. And that is really because here's some solid support level right around that region. So when it gets there, we'll see how it reacts and behaves. So those are my positions, really. There's some others I was looking at. Here's C. We didn't get a chance to jump in on it today just because I was out and about taking care of some things, but this was one I would have wanted to get in just lightly, but I could get in a little bit tomorrow. There's no rush. There's plenty of time. We'll see how it reacts. If it comes back up to this level and rejects it, then that's also another opportunity. But if not, just go on, next trade. CMP, same thing here. Here was the rejection. I was watching for this to reject, rolled over. But looking at my current positions, I had plenty on the plate. So I said, you know what, I'll let this one pass as well because the volume is not as high on the sell-off as I'd like it to be. Cyber. This one also, here's a critical support line breaking right there, selling off, picking up in volume, looks good for lower prices. Waste management, I was waiting for the break actually on this one, so it will just require more time. It still hasn't broken it yet, so this was a resistance line right here. Apple here, we've been watching it, always watching, trading Apple all the time. So here's the support and resistance line, got a little above that, sold off, boom, rolling back over. Just doesn't have the juice. There's weak. It's acting weak. It used to be a leader. It's still powerful company. A lot of shares traded, but acting weak. One of the members asked to do Facebook. So here's Facebook. Your entry points really for Facebook were right here on the break. So ideally, you'd want those shares at this price level if you could. Now, unfortunately, again, we had earnings. So what you're waiting for is if you have a pullback, if you normally trade, let's say 1,000 shares, you would trade maybe 200 shares and nibble it at these levels. But remember, the key support and resistance is over here. This is the key. So does that mean that once the stock starts selling off and coming back into here that it's bad and you should short it? No, it just means it's a pullback. It's a light pullback. So don't think that just because we start rolling over that it's, all of a sudden it's time to short. In fact, it's just could be a natural pullback coming back here to retest it and then power higher. So I'd watch this level. If you want to go half in or a third in and then see how it continues, then you can always add on other future pullbacks. But the move is, you're waiting for that. The other opportunity is wait for a clear of these highs right here. Those highs of, what do we have here? 110.65. So wait for the clearing of 110. 95 and wait for those 111 right around that area for a potential long. LinkedIn here, this one is because it doesn't trade a large amount of shares and it whipsaws around. You want to be careful. So looking at this one on the daily can be really confusing. So I like to look at this one on the weekly. And this one has a huge overhead supply with 26.5 million shares over here on the sell-off. Ideally, because we don't have a lot of room, how much room is left? Right here to here is only 14 points. Ideally, I would rather this stock break these highs here than trying to get in it right now. I understand that right now it's been moving and it went up 14 points and it went up technically 50 points from that breakout. But if you're not in it now, you'd want to wait here for 270, let's say on the safe side, 278, 279. Because here, looking at the monthly chart, if you're looking at this monthly chart, you can see that this is where the resistance is, and you look at how much is left, how much is remaining in the run. It may only get to 269 and then come back down to 215, and there would still be nothing wrong with the stock. So I look at what's the potential, and the potential here is just 10 points, 15 points. If you want to get in it and you have very tight stops, you could, but this one will whipsaw you around. And just to give the review for a member, that's the way I would look at this stock, just because it's a higher price stock. And these higher price stocks, you got to give them $10, $20 moves to wiggle around, $10, $20 point run to wiggle. And that's what we do with like a Google. You got to give this stock a $5, $10 run so you don't get stopped out. So here's a $15 wiggle point, and you have to keep that in the back of your mind that this stock can drop 15, 20 points and still nothing be wrong with it. It's a whole different way of trading. So when you start getting into this, when you start getting and looking at all these different charts, you'll start being aware of certain things. And for me, when I first started trading, I would mostly just do day trading. It was quick, easy in the sense of, I knew what to do, buy shares, sell them higher. And that worked out pretty easy. But one of the things that really I struggled with when trading the markets, when looking at the markets, when just improving and getting better, and why it took me, over a decade to just get better at it, was just personal growth. A lot of it has to do with personal growth, self-improvement aspect. And you heard me talk about the inner game and the outer game, and the inner game took a lot longer than the outer game. I tend to spend a lot on the outer game when I was first getting started to learn everything or try to learn as much as possible. And then I would try and use MACD. I would try to use stochastics. I would try to use all these different indicators to figure things out. Then I'd get into option trading. Then I'd get into trading verticals. And you start dabbling into so many different things that you don't really know where the right foundation is. And going back to basics and fundamentals, and one of my martial arts instructors said, back to basics, back to fundamentals. We went back to fundamentals, and I said, why don't I do that also in the market, in the stock marketplace? Because I didn't really have a specific mentor that taught me, and maybe why it took me so long. We didn't have YouTube at the time when I first started trading. We didn't have all these videos. I was still doing dial-up. So at that time, connecting to AOL dial-up with the crazy tones, and, you're dialing in, and everything was a lot slower back then. So for me, when I first started trading and doing all this stuff, it was really painful. And it was painful because I was trying all sorts of different things, and there was a lot of things thrown at you. And it's like, okay, this thing's going up higher, and this thing's telling me to go lower, and this thing's telling me there's a lot of action here. And this guy's telling me on TV that this stock is going to break out. And then there's news and FDA approvals and earnings. And it was just too much to really digest. It was overwhelming to the point where you just break down and you say, I've had enough. I've had enough of this. And, going back to the basics, going back to the fundamentals is really where things started to take off. It's like getting better at, skating, running, walking, fine-tuning your techniques, at kicking. All these things, they have their own little specific things that you start watching for. And for me, I started breaking things down. Now, for me, when I used to do full contact kickboxing back in the day, I only did that for a short time because I didn't want to take too many head punches. But when I did do that, I was very good at kicking. And I started to really break down the kick in very detailed manner. And we started to break it up into, most of you that know how to throw a kick, or if you've done martial arts, taekwondo, any of these kinds of things, there's basically 4 parts to a kick. You have a straight up, the knee goes up, leg goes out, pull it back, and then you put the foot back down. Now, a lot of the power, you can break down the power going in from a lot of areas, but as I started to break things down, one of the things that I didn't realize was that, a lot of instructors and people, they talk about power from the hips, power from the ground, power from the rotation, all that power coming from the body momentum, from the knee extending. Okay, so you have from your hip, you have the extension, then you have a knee extension, but we never got into specifics until there was one guy that started breaking things down even further, the basics. And he explained that, most people, they look at the hip, they look at the knee, they look at the rotation, the twist, the torque, but not a lot of people talked about your ankle. Think about all the walking that you do. Your ankle has the extension, the movement, your toes, all of that when you're walking around on your toes, the balls of your feet, all of this has additional room for extension. And light bulb went off. And when he said this, I'm also thinking in the stock market. I'm thinking and I'm applying all these to my other things in life. I'm thinking about tennis. I'm thinking about all how these things put together and all these puzzle pieces work together in my life, in basics, in fundamentals, because all the things in life, they work together. There's synergy there. And I started to implement things. I started to go back to the basics, and I started to fine-tune things, and I started to go back to the root: price, volume, and behavior or action or wide price spread. So I started to break things down looking at price. Okay, so the point of the stock is to purchase it at one price and sell it at another price. So looking at price. Instead, I was looking at trend lines, getting fancy with all these different things, but looking at price. How is the price moving? And that was a big aha moment. That to me was aha, because not all days and not all prices are created equal. So if I take, for example, the price right here of this stock, okay, or at that bar, and I take a look at the bar right here, the value of this bar is a lot less than the value of this bar. And that is because there's a wider price spread. It's wider. Also, looking at the volume, you can see that there's a lot more volume here as well. So the value of it is just more important. The importance of that is key. Let's take a look at another one. This bar right here is more important than this bar or this bar. Okay, it's more important than even this bar over here. Okay, so you can look at how these bars act and react. Okay, and then you start looking at price. How is that price affected? So looking at this bar, how important is that? And how important is that next bar? So looking at this right here, we have this bar right here, and this bar is important because of the swing point, but this bar is also important. This bar, not as important. This bar, not as important. I started looking at the price, and I started to get things. I started to come and put these things together. And then I moved to the next thing. I started to go to the next thing, the next thing, the next thing. And what's the next thing? Well, there's a lot of different things. Then volume. I started looking at volume, how volume compares with the price. So then I would compare this. I would compare this price bar, volume of 23.4 million shares, and then I would compare it to before. Where's the other swing points? Where's the other area? 69.7 million shares. Where's the other important bars? Here's 34 million. So we have 23 million. We have 69 million. This is a 34 million. Okay, this is another important one. 32 million. Here's another important one. So we got 35 million. Okay, so 35 million up, 34 million and 35 million up, and we have 69 million, 23 million to the downside. And then again, over here, 37 million down. So we have 37 down and 35 up. Which one's more important? 37 million to the downside or 35 million to the upside? Obviously, the 37 million to the downside is more important. Plus, it's more recent. And the volume, the spread, the price of that is also bigger. So then, that tells me, stock is going lower. Stock is going lower. Then I look at the next part. Where's the next important price point? What's the volume there? Then it's breaking it. It's breaking it on 19.8 million. 19.8 million rather than 37 million, 35 million. The volume now is weakening. It's not a fast break. Less important, right? If I was to assign a scale to this, let's say it's an importance level of 5. Let's put it in the middle. Average 5 out of 10. And the reason is because what happens later? Well, we get a upbeat 19.5 million. So we went down 19.8. We went up 19.5. And then what happens next few days? 17.5 down, 42 million down, 34 million down. Now I'm realizing 19.8 million down, 19.5 million up, 17.5 down, 42 million down, 34.7 million down. What does that tell me? That tells me this volume bar, 19.5 versus 19.8. 19.8 is more important. So when I see this, when I see 19.5 at the end of the day, when a stock is going up on 19.5 and just previously the important bar at 19.8, what do I think is going to happen? The move is fake. The move is not real. The move will continue lower. And then, boom, light bulb goes off and you just, snap, get into it, boom. Next thing, you learn this. So all I'm sharing with you is just two concepts right now where you got it. You got it. You get it. You know it. You got price. You got volume. Then I would go to the next thing. And the problem for me, and I'll tell you the big problem for most people, is they take too long to get there. For me, it took more than a decade to get there, to understand this, to put the pieces together. It just took too long. I wouldn't say it took too long. I mean, it's just part of the educational business. It's part of learning. It's part of getting there. It just took time. And a lot of this has to do with putting the time and energy into it. I don't know why it took so long, but maybe because I didn't have the mentor, maybe because I didn't have, YouTube around, maybe because I didn't have the appropriate courses. I had to do it on my own. I didn't have someone to guide me through the process. It just took a lot of extra time that I thought could be condensed. And one of the ways to get to those fast gains in the market, as I've mentioned earlier at the beginning for the core of the lesson, is speed of implementation. The quicker you can learn and implement, not just learn, but learn to change your behavior and implement the things that you're learning. Because once you learn something, such as going from crawling to walking, you learn to walk, you typically don't crawl anymore. So the quicker you can get to implementing what you learned, the faster you'll get to your end destination, the faster you'll get to your goals. So if you can learn and implement and do those things as fast as possible, once you learn something and implement it, then you'll get there. But you have to do it accordingly. First, nature rules. First, you have to learn to crawl. Then you learn to walk. Then you learn to run. And then potentially learn to fly if you get there ever. So in either case, you just go step by step. Nature rules. And you got to learn in the market. You don't get to MACD, stochastics, all these different indicators until you learn price, until you learn volume, until you learn behavior of a stock or wide price spread. You don't get there until you learn those things. And until you know those things, I know it's probably boring. It's kind of like your instructor or trainer telling you, well, today we're going to run again. Today we're going to run again. And then we're going to run again. And then next week we're going to run some more. Next year we're still going to run some more. And then what you can do is you can run and put a tennis racket in your hand, and then you can hit the ball. But first we're going to run, because we're going to build your endurance. You got to know how to run properly and quickly so you can get to the ball. So first you start with the core. You get to your fundamentals. You get your price down. You get your volume down. Later, after a while, I would get to, let's just take GMCR. It's a fairly easy example, or even win. As you get better, you'll start learning and seeing things. So I would get to these points, and then I'd start implementing new things. I would implement things like ABCD patterns. So we have A to B, then here's our B point, B to C, and then we got C to D. So, it continues, and then it repeats, A to B, B to C, B to C here is sideways, and then potentially D. So we'll see if that pans out. But if you look on the weekly, you have the same thing on the up channel. So here again, we have A to B, B to C, C to D, and there, that move is done. So here's our A point, here's our B point, here's our C point, and here's our D point. So A to B, B to C, C to D. And this is just typical stock market move. This is human behavior. We get a nice run. People want to take some profits. They don't want to take everything off, or not everybody wants to take everything that they had off. So some of the people still, like the people back here, will still leave some shares. And then again, we continue for another run. For the people that missed out on the trades, we'll continue. Okay. Or if we break these highs right here, notice how that works out right here. Boom. We come back after we break this level right here. Okay, so we break that level, then we come back and pull back to this level right here, and we continue to power higher. See how that works out right there? Boom, we break it, come back, retest it, and we power higher. So that's your ABCD pattern. Then I learned ABCD patterns. Then I applied that together. Okay, but that all took time. That all took a lot of energy. It doesn't happen overnight. It took a lot of patience. It took a lot of discipline. It took a lot of time to stick with it. And that's probably one of the biggest things, is that the ability to stick with it, to be committed. And if you're not committed, that's really where you'll struggle in this business. So if you can learn something and you get something, you get some knowledge, insight, whether that's for your business, whether that's in your life, your health, the way to cook something, if you can learn and then do it right away and apply it, then you'll be better off, because you're implementing it right away in your life. You'll be able to use it time and time again. And when you can use it, you get better at it, just like cooking. You continue to cook. You cook, let's say, a steak. You cook a steak once a week. You'll get better at it after a year. You cook a steak every day and you're a cook for a restaurant, or you're a chef, you're going to be really good within a couple of weeks or a couple of months. The more you do it, the better you'll get at it. You just continue to evolve and get better, implementing what you know and learn. But it all starts from the core. And if you don't have the core, if you don't have the foundation, if you don't have the basics, there's no way you're going to learn about MACD, stochastics, fancy indicators. But if you don't understand how price moves, how action moves, how behavior moves, how just stocks are breathing, if you don't understand the basic concept of life within the market with just the way that price moves in that action, you're going to struggle, because you're going to chase the fancy stuff. You're going to chase the fancy indicators. So calm yourself down, go back to the basics, go back to the fundamentals, review things, apply things one by one, and then all these things start falling into place. Then you say, okay, I got it. ABCD pattern. You look at this stock right here. Okay, here's A to B. Okay, we're breaking out. So here's my A point right here. Here's my B point. All right, so I'm looking at the stock right here. I missed the breakout, so let's let the stock ride. Here's my pullback. Okay, now I notice the stock is pulling back. The stock starts breaking out. This could be my entry point. If I miss that, no problem. No problem. If I miss that point right there, instead, Now what I do is wait for this next break because I know I have highs here. There's my B point. I know I have another high right here. Let's just call it point H. And then I'm waiting for the next break. And I get in right here. If I miss that point, I get in right here on the bounce. So even if I got in on the bounce or even the break right here of this high, okay, right here from here to here, still 60 points. 60-point gain in this stock in a short period of time, in just 3 months. 60 points. And just to give you an idea, let's just say you have a 60-point gain and you just have, let's say 50 shares. That's $3,000. 50 shares, okay? If you have a 60-point gain and you have, let's say 500 shares, that's $30,000. Let's just say you only had a 40-point gain, but you traded, let's say 1,500 shares, $60,000. 40-point gain times 5,000 shares, $200,000. Now, I'm not trying to, boast about numbers and things like that. What I'm saying is that even with a 40-point gain, and let's just say you had 20 shares to make it conservative, that's still $800. $800, just think what that could do to change your life. If you just had $800 and you made 8 of these trades, that's an extra $5,000, $6,000, $7,000 per year. How much different your life would be. Now, imagine a large portion of the world lives on less than a few dollars per month. So, for you guys, if you're looking at an extra couple $100 a month, that's a great starting point. So I just wanted to share with you that if you start looking at concepts, start with the basics, implement things as quick as you can, because that'll really compress your learning. I mean, then maybe it won't take you 10, 12 years like it took me to figure things out. Instead, it might take you 3 years, 5 years, maybe 2 years, maybe 1 year if you're lucky. But it takes time to learn these things, to understand these things, to put all these things together. And we'll be launching one of the final videos after the option course on how to really put all these things together and exactly what is it that I do when I enter the trade, why I enter the trade, how I choose these things, really specific. And that'll just be coming out later towards the end of next year. But that's one of the things that I really want to cover is just putting everything together and seeing how it all works, tying it all together, how the trading works together, and making it all work together to benefit you. All right, hopefully you enjoyed this rapid recap. I know we didn't talk stock specific, but it's really important you get that inner game. It's really important that you go back to the basics, go back to the fundamentals, learn step by step what it is that you need to do to continue to improve your craft. Continue to evolve, continue to get better, step by step, piece it together. First, learn about the price, learn about the volume, go back, put it together, make it your own. But you still, of course, have to do your due diligence to learn all that outer game stuff, all the external things in order to make it all work. Go back, start from the basics, go step by step, make it your own, and just continue to improve every single day. I'm pulling for you to become successful, whether that's to make a little bit of extra money, from the side, whether that's to use that extra money to go to college, whether that's just for a long-term side income or retirement fund. You don't have to be a full-time day trader. You don't have to be a trader every single day, every single week. But if you at least learn the basics, so that way you can rest some money aside and, continue to check your positions once a week and your retirement funds grow, then by all means, you've won and you're ahead. And, you have the oyster right in front of you. The world is your oyster and you can continue to do greatness from that. All right, go out, enjoy this weekend, have some fun, help a friend, do some studying, and just continue to get better. Thanks again for joining me, sticking with me, and just being a part of this community. I'll see you next time.